Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Clicking in on the dollar on the weekly time frame, so we have our new low, which is down here at 92.50, and we have our resistance up at 95.15, and we're right in the middle of that range right now. So in order for the bulls to see continuation of this bounce, we have to break that high and see a higher high, and that will be the start of a significant trend change where you can see all 2017 was just lower highs and lower lows. We saw a significant bounce here in the end of the summer and into the fall, and now the bulls need to cap it off with a strong winter and a bull break of 95.15 if we're going to be heading into 2018 with any kind of bullish momentum. If we do break 92.50 support, that confirms that the bears are still completely in control and there's a lack of support down here. So that would be a worst case scenario for the bulls to break 92.50, and then we're looking down at 91.01. But they are still holding on at this point. Gold has certainly been weak. The market has been strong. The daily chart for the dollar, we can see a new higher low established here, and that's down at 93.28. And our shorter term resistance is 94.22. So zooming into the daily time frame gives us a little bit more details, a little bit of a tighter range from what we saw on the weekly chart. And we'll watch for a break of this range next week to indicate which break on the weekly chart is more likely. On the gold, get rid of some of these lines. Gold on the weekly time frame is trying to form a bullish reversal candlestick, and we'll need to confirm that with some follow through this coming week. So our new support is down here at the low of 1236.37, and our resistance for the bulls to break the lower high is up here at 1299.10. Any kind of bounce that hits a high that is lower than 1299.10 is just a lower high, keeping the bears in control, and they have been in control since the start of September. So the daily time frame sees it's not a very strong bounce. There's an upper wick of profit taking on Friday, and you can see it was just an oversold bounce on the shorter term time frames, and the daily chart RSI did hit 30. So a weak bounce at this point, the bulls are going to have to consolidate and hit a higher high to see follow through. 1261.69 is a resistance level now that we need to be watching, and I still do not like the gold bulls. There was a nice oversold bounce play, but oversold bounce plays against the trend are short-term plays, and that may have been all we get from that bounce. Have to see 1261.69 break for continuation. GDX, so we had a very significant bull day on that oversold bounce day, but we are, again, doing nothing to change this trend. The middle Bollinger Band is resistance and rejected the high of that bounce. We have support at 2180 and resistance of 2232 in the short term. If we can get the middle Bollinger Band to support, in order for the bulls to completely take back momentum on this daily chart, we have to break 2317. And from where we stand right now, that is almost a 4.5–5% move. So still a lot of work for these bulls to do. The weekly time frame, 200-week moving average support trying to hold. We've had a lot of play with this moving average in the past in this year. Bounced off of it twice, did lose it briefly, but regained it, and here we are bouncing off of it again. So bulls are trying to form a reversal candlestick off of that level. But look at all these tops, 2291, 2302, 2291, 2309. So a lot of resistance right around 23. That's going to have to break for the bulls to regain full control. GDXJ got over its middle Bollinger Band resistance, but it's also been weaker before, so that middle Bollinger Band has dropped down more significantly. We have support at 3102 and resistance at 3187. For the bulls to turn momentum around on the daily chart, they have to break 3268. So here it is about a 4%, a little bit less percentage-wise of a bull move needed to break the lower high pattern, but still significant. Same thing, bullish reversal candlestick on the weekly, have to break 3268 for any kind of change in trend. Otherwise, anything under 3268 is just another lower high. So that's what we're watching for. Again, the gold itself and the miners have not seen a ton of volatility and trading opportunity. It's really been boring compared to what we had back when the FOMC was really a gamble and the market didn't know what to expect. So traders have moved on to elsewhere where there's more volatility and opportunity. That doesn't mean there isn't opportunity in gold. We had this big bull candlestick, but you can see that that one day was the most action that we had for the bulls in the last 3 months. So it's been very tight ranges, not a whole lot of consistency in terms of direction unless you're playing bearish for the last couple of weeks or months, which has gone well. But I personally do not like gold or the bull miners for anything more than short-term trades until the market shows weakness. We have to keep in mind that gold is a safe haven when we see market weakness, and that is going to be a reason for people to flock back to gold. And with the market at all-time highs and running in insane, pretty much just insane mode right now, we have to assume that people are not going to be interested in gold until we see weakness. So I appreciate you watching. We'll continue to check back in. Have a great rest of your weekend.